As you might know by now, Roundhill ETFs came up with a brand new ETFs. This ETF is different from any other ETFs that you've seen from Roundhill. This is a bond ETF, a Roundhill ETF Trust or WEEK. The price is 100. This is no NAV ETF. That means it does not fluctuate. It stays around $100. Since it started trading, the lowest has gone is 99.99 and the highest has gone is 136 cents. So you can see there's no big movement. Your money is going to be safer with this ETF because it does invest in a T-bill, which is a government secured bond. If you want to know more about this ETF, check my other video I made when this ETF came out. And if you like this type of content, consider liking this video, subscribe, hit the bell button so you get notification whenever I release new video, and share with someone who you think this video might help. For people who don't know about this ETF, Weekly T-Bill ETF invests in 0 to 3 months US Treasury bills and seeks to pay weekly distributions to shareholders. Overview here, Weekly T-Bill ETF. WEEK is a short-term treasury bill ETF designed to pay weekly distributions of current income to shareholders. WEEK is the first of its kind ETF that targets a stable NAV week over week. WEEK is an actively managed ETF. The most appealing thing about this ETF is that it has a stable NAV. You are receiving weekly distributions, but your capital is not going to have that NAV erosion like other regular ETFs. And there are three main reasons why you should consider investing in this ETF. It does pay weekly distributions, it's cash alternative, and it has that stable NAV. WEEK has just paid its first distribution. As I mentioned on the previous video, that's going to pay distribution on the 12th. The announcement was on March 10th, and record date was on March 11th, and yesterday they just paid. They only pay about 7 cents, so it's very low. I'm not sure if that's how much they're going to pay forever, or it's going to fluctuate in payments from maybe 7 cents to maybe 10 cents to maybe 15 cents, 20 cents. I don't know about that because this is the first distribution. The next distribution you are hoping to receive is on March 26th. So you need to buy this ETF if you want to receive distributions before March 25th. And the following after that is April 2nd. And after that is on April 9, 2025. Now you know the schedule. The first distribution was only 7 cents. How much that in yield, and what strategy can you use to grow that money? I'm going to show you. On this spreadsheet, I lay out the numbers. So we have a ticker symbol, we have price, we have distribution, and we have a yield. WEEK, the price is 103. Distribution to pay only 7 cents. That's equal to 3.5. Very little. Remember, this is like a bond. It's meant to balance your portfolio. It has nothing to do with the growth. You're not going to make much money on bond, but 3.5, that's bigger than most bonds out there. And on the bonus point is that this can be compounding on a weekly basis. Let's say you have $10,000 or you have 100,000 or you have whatever amount you have, but you want that money to stay steady or to keep up with inflation at least, so you don't lose your money, but also you don't want to invest in high risk stocks or ETF. You can invest your money in WEEK ETF, and you're going to compound at 3.5% on a weekly basis. Every Wednesday, whenever you receive money, you're going to buy more shares and it's going to compound that way. So here's an example. Initial investment, you put 100,000, and your interest here is 3.54. We can assuming that it's going to stay the same, but again, this might change because Roundhill ETFs and all these income generating ETFs, they always have different distributions, so it might change. Compounded weekly, number of months is 60, which is about 5 years. Your $100,000 is going to be about 120, provided you didn't put any other amount, and this amount does not change. So that's more than what you can get from bigger bonds. Even BND, you won't be able to get this much. And most bonds actually go down in value. Let's look at this example. This is one of the most popular bond ETF. This is a Vanguard Total Bond Market Index Fund, BND. Look at 52-week range is between 70 to 75.67. There's a $5 difference there. So let's say, for example, you invested your money at this time and you want to take your money, but you are down $5. So on $100,000, that's a lot of money you've lost. But with Roundhill, it seemed to be stable. There's no movement of downward. So that's really great. And BND yield is only 3.61. But remember, you have NAV erosion because this ETF can fluctuate up and down. But I can hear you if you're saying 3.5% and 7 cents is not really enough money for me. Now, check my next video, which I showed you the other strategy that you can make this income compounding every other day. So you're going to compound this money not weekly, but 3 times a week. That's my next video that I'm going to post. Make sure you watch that video. It's going to be very interesting. So I just want to make this video to show you how you can invest in weekly T-bill ETF and generate not a lot of money, but it's enough money that you can compound on a weekly basis. And if you want to compound even more, I'm making another video to show you how you can do that. So that's all I have for today. If you like this type of content, again, please smash the like button, subscribe, hit the notification button, and share with someone you think this video might help. I really appreciate you watching this video today. Thank you very much. I'll catch you on next video that I'm going to make. Bye bye.